Hey, Quasar Markets Live. Today I've got a really good one. Y'all know him. He is a precious friend of mine, and I say precious and meaning honesty because it's gold and silver and precious metals. What's up, Peter Thomas, Chairman of Ausecure?
Hey, we're seeing brand new contract highs in 40 markets across the world in gold, and it's just flying off the shelf. I'm just amazed people are paying these prices, and they'll buy a piece of gold and then they're dipping in and buying a little silver too. So it's been exciting.
You know, I like to buy gold and silver when prices are down, and I think prices are high right now.
It's amazing. When somebody goes, well, how much are those eagles? And you go, well, we're 2,900. I'll take 10. Oh, okay.
Okay, yeah, I like that.
No hesitation, man. So I think this morning, Steve, we had some announcements from major banks, and as well as Bank of England, and they're all talking much higher prices. So there you go.
Yeah, when I'm constantly asked about the price of gold, and is it going to go higher? So is it going to go higher? I said, well, I want to turn to Peter and ask, but $2,800 is pretty high for a troy ounce here. And now here we are, 28.80 this morning, right, an all-time high. And look, we go into, I've called for 3,000. Is this about where we're at?
Yeah, well, if you remember back in June of last year, I said 28.50 in an interview with you, and everybody said we were crazy. Now they're going, why isn't it higher? So how right could I be?
It's funny. People always ask me, when should I sell my gold? When should I sell my precious metals? It's very simple. For me, it's when I see gold commercials on TV. Those companies are trying to sell their gold, get you to buy their gold, right? You're the opposite. You're the company that just, and of course, if you don't know, Quasar Markets has Ausecure live in the system, so you can actually buy gold and silver and precious metals right in place. But you're right. Let's talk about that. Yeah. Central banks buying metal crazy.
It not only is it crazy, it's interesting in a market that's 5,500 years old and has been used as a currency for that long. And you look at it and you go, we got new players. Kazakhstan came in and bought a ton. My partner calls me and says, Poland's bidding on 4 tons right now. I said, Poland? What? We're seeing people coming into this market that we've never had before, and they're not buying small numbers. A ton of gold is a lot of product, and they're buying it aggressively, and it has not slowed down. Bank of England just came out with a notice today. I thought it was very interesting. They said, well, if Trump puts tariffs in effect at anywhere, they're talking like 10 to 25%, it's going to impact gold, and everybody wants to take delivery now before we put 10 or 20% on it. And I'll tell you something, during COVID, we were granted special access, special passes because of the critical metals we deal and how important it is for them to be in the system. So we were given exemptions. But I kind of look at COVID the same way I look at the tariffs, because I look at the last tariffs he did, which didn't affect gold, and I'm looking at it now, and I don't see Trump slowing up metals that will create employment. So things like silver, copper, iron. Maybe iron because of dumping that we've seen from various nations, but I think the other stuff, I think it will not be tariffs, Steve.
Yeah, people don't normally buy precious metals until they're scared, right? And exactly. You see, are people scared? Is this a time to be buying? I don't like to buy things when it's high, but people seem to be scared.
Well, let's look at numbers. I know you're a very good technician, and let's do a flip onto the technical side. It's something that is referred to by traders as the GSR, which is the gold-silver ratio. Generally speaking, it runs around, and current date, it runs around 60. We went out to 90, which means silver should be at 46. Now, granted, I was the first person to trade silver at $50 when I was holding a deck on the floor. So, I'm still thinking in the back of my mind that before I leave this show, I'm probably going to see 50 again, And the thing is, are we going to see that, pull silver up, or inversely, will we see gold fall back? Nobody knows.
Yeah, and for those of us out in the public that don't understand, thanks, Howard, for bringing the chart up. Gold, silver, it's the difference between how much gold and silver the buying here, and 90 is very high. I mean, we're not seeing that. It means gold's pulling away price wise to silver itself.
Yeah.
I think you're right. Now, I've been calling for silver to go to $50 an ounce. I think you're more right. Around 46 is about right. Nobody wants to see 50 because too much. I mean, that means that sky is falling here. But you're right. When I look at it from that perspective, last time we've seen gold, silver this high, I mean, the world was not a good place.
No, and we now have a president in office who's saying wars are bad, and if you remember, our initial rally was when Russia rolled into the Ukraine, and people just started buying gold hand over fist in Europe,
right?
And demand started going. We were shipping, so now we have a leader who's saying, hey, I want to end all this stuff, and the gold to war ratio, which is a fear ratio, really.
Fear ratio, yeah.
Is about $700. So, we got to pull back to, let's say, 2,100, 2,000. Be very realistic. And I would not have a problem entering at that level.
And the last time we had a quote tariff war, it was back in the 1930s, and we had depression. So what is it about this president who loves tariffs and using it as weaponizing in a lot of ways? Why is he doing that? Is he going to stick to this, or is it just a bluff to get them to bend to his knee?
Well, Steve, look, it's the art of the deal, right?
Okay.
I mean, this guy knows how to do. Hey, Mexico, I just put 100% tariffs on you. All of a sudden, the next day, they send 10,000 Mexican Marines to the border, and they're going, we're going to make nice. Everything's fine. We're stopping the cartel. The guy wields those tariffs like a club, and he's a master at it,
Yeah, and when I look at that, as soon as that happened, Canada got in line and made phone calls to the president, right?
Yeah,
but
right.
China said, okay, fine, you're going to play this game. I'll just put 10% on everything, and that's how we're going to do it. And China has not backed down, and the United States has not backed down yet. Yeah. Is China's central bank also buying gold as well?
Yeah, PBOE, the Central Bank of China, has been aggressively buying. I would say for almost 15 months, China was on board for anywhere from 11 to 13 tons every month like clockwork. A couple of months ago, they came in and they said, we're not going to buy anymore. Then I get a call from a friend of mine in Canada who owns mines and is a big trader. And he says, Canada's in here buying everything that isn't nailed down, and they were shipping it out through Hong Kong. So they're using their back doors, and they're still buying aggressively and buying physical from mining production, and also they're bringing in metal from Africa as well, Steve.
Right. And I think Africa is the next big level of pretty much everything when it comes to metals. All right, let's get to it. Outside of the central banks, are other banks buying gold too as well?
Central banks are still the big players. Mid-level banks, we really don't see them participating because it's not part of their structure, Steve.
Right. I got you.
Yeah.
And then let's get right to it. I mean, we've seen some situations in California unfortunately with the wildfires there, right? And you're not just Mr. Gold and Silver, you also do other metals too. And let's talk about that. How is that going to affect the metals market too, the big wildfires out in California?
I'm really glad you asked that because we lost approximately 12,000 homes. Now think about this. Every home there, and there's a lot of smart homes, and they really don't like a lot of their water going through plastic or PVC pipes. They alternate to copper. So we're looking at anywhere from 440 pounds to 650 pounds of copper in every new home. How is that going to impact the market? It could be very dramatic. The question is, and that's why this is such a good question, Steve, how soon will they start issuing the permits, and how soon will they get insurance settlements? All of that maturated together will cause a gigantic demand for copper pipe and multiple grades of copper as well.
Yeah, and it's also in air conditioning and all kinds of things. Copper is really out there. Yeah, it's yeah. And when you look at it, when you're looking at precious metals, you talked about one the other day that I really thought was interesting, and I hadn't heard in a while, and that's palladium.
Yes.
Yeah, you I think you hit the nail on the head. Tell us a little bit about palladium and how it's used and why you think the price is going to go up there.
Well, for all of our viewers that follow us, Steve, and are on the Quasar platform, we had a very lengthy discussion on it, and when gold was about $400 or $500 lower, I said, listen, now's the time to trade your gold on this rally and start stepping into platinum palladium. Now, The reason I was bullish on palladium was trading at $3,000 before the EV introduction. When the EV introduction came in, we saw it drop and lose 2/3 of its value. It was a big break. And subsequently now we're seeing people coming back to a non-EV stance, if you will, and they're buying cars that burn fuel, or they're doing hybrids, which also use palladium. So I think what we're going to see is a fundamental change in the market again, and being in under $1,000 in palladium, which was trading freely at 3,000, not a bad idea, especially when you're up 30, 40, 50% on your gold position.
Yeah, and palladium is, for those who don't know, is used for catalytic converters to keep that smog down, right? And right. When you go to hybrid and you go to electric, they don't need it as much, but I think with the new but with the new president, we may go back to building the old types of cars, right?
Well, you know what? The old types of cars, are now getting 40 and 50 miles to a gallon off of the hybrid. That's hard to fight. And, if you have a catalytic converter, which uses your palladium in it to clean emissions, you're going to have demand again. And so it's something that I'm looking at 6 months, a year down the road. I'm trading metals. You're a little longer term investor, and it isn't that quick day trade. But, if you can get a 20-25% return on your money come year end, it's not a bad day.
All right, so I'm gonna end it here, Peter. I'm gonna ask you, gold to $3,000 an ounce, when?
It's all going to depend on tariffs in the next month or two. If indeed the tariffs come in and they do influence gold, we're going to 3,000 without a question. If we pull out of the Ukraine, we see the things in the Middle East calming down again, we're going to pull back and probably test 2,000 this year. Okay,
and silver.
Silver, let's go back to my gold silver ratio analysis on the technical side. Absolutely, 46 is my number if we see gold rally. If not, we have to see silver hold 28.29.
28.29. Yep. All right, my friend. Peter Thomas, chairman of Ausecure, and Ausecure is actually in the platform for Quasar Markets. If you wanted to buy any gold, silver, coins, all kinds of stuff, I've got some from Ausecure. Come see us on the platform. For all of us here at Quasar Markets Live, thank you so much, Peter, and we'll see you here next time.
Thank you, Steve. Always a pleasure.
Thank you guys so much for joining us today. I'm going to do a mid-market report right now, and I'm going to have Charlie Moon in at 2:30. Again, Peter and Big Beat, thank you so much for joining me today. Okay, let's take a look at the markets here. We've seen some movers here today. It's been an up and down day. I will say the thing that I'm watching probably the most here right now is the fact that we are seeing a little bit of a pullback on the early morning risers. So when I took a look here, we talked about Peloton early this morning. You can see it's pulled back from its highs at 9 a.m. at about 976. It has done almost a full half measured move back here to the 829 level. So again, Peloton's pulled back. Tapestry, it's pulled back also. Most of these charts are showing the same mean reversion to the downside. A couple that were not actually holding up. I saw Philip Morris, a name we haven't talked positively about in years, but that's doing really well today, up about 10.28%. And you can see it's trying to break back to highs of the day. I do think a move over 146.80 here, you could really see a run on PM today. I also noticed that HSY, which of course is Hershey, my favorite chocolate company, it's done a nice little, it's holding up pretty well, holding up better than some of the others this morning, up still about 5.09% here today. Give Give me 1 second here just to pull up my correct banner there. And I did notice also on the other side of that, we still have some pumpers here this morning that are moving. LTRY, the big winner so far, lottery.com, believe it or not, is the ticker there. They are the lottery ticket today, up 135%. And you can see just broke to new highs over the last 20 minutes or so. So definitely seeing some strong move here out of that. Lipo, another one here. Lapella Pharmaceuticals. It made a big run up, but this one's done almost a full half measured move back here. So again, seems to have lost its luster. QNTM, Big Beat brought up earlier today. We were trying to watch this saying more of a fade than a follow through. Got to be honest, it's held up pretty well. If we look at the hourly chart, it hasn't been as bad as I thought it would. Again, what I like to look at here, if we throw in just a Fibonacci level, I'm usually looking for something to get pulled back here to at least this 0.382 level. And if not all the way to the half measured move back, you can see it tested that 382 immediately within hitting that highs. But then since that move up, it hasn't really retraced back down. So again, so far holding up pretty well. Not really for me a spot to trade it in right now. It's sort of in between zones here. I would need to see a clear breakaway above 18 to look for a long or break below 1458 here for a play to the downside. Couple of others here that have been losing. Big loser on the day so far. SunCar Technology. Again, we've seen green energy just getting killed. And they did announce a $50 million public stock offering that caused this to drop so much. Looks like they need a quick money infuse. This one's dropped, hasn't even bottomed out yet. So keep an eye to the downside here again. SunCar. Another one firmly to the downside is BioXcel. And they are going to implement a reverse stock split to try to get themselves into the guidelines needed to say listed on the NASDAQ. For those that don't know, NASDAQ allows you a certain amount of time and you have to trade above $1. And if you don't, you can be delisted. And if you break the trend and even stay above $1 for a minute, you sort of reset the clock. So that's why you see a lot of these reverse stock splits come up, but they're not usually very good. It just usually prolongs the agony, so to speak. So again, not going well there. Census Healthcare, another one that dropped down significantly here. This was on an earnings miss, and they missed their EPS pretty significantly. They were looking to come in at about 12 cents. They came in at 9 cents. So that definitely spooked the market. Hadn't really seen much other news there on them. Another big loser so far today to keep an eye on. Again, most of these are in the healthcare markets. It's funny, this morning we were talking with Jay Wood from Freedom Capital, and he was mentioning how healthcare, believe it or not, has been the number one sector in the year so far. And now it is taking a beating today. So we'll keep an eye there. So that's what we see. Again, my big takeaway, it's been a mean reversion day for most of those early morning risers, Peloton, Tapestry. They've basically reversed. Same thing on the other side, the big losers earlier today, reversing a little bit. I'm one that's keeping an eye on SWKS. Their reliance on Apple, huge problem here. But as Big Beat brought up this morning, they could be ripe for acquisition now. We know there's a ton of merger and acquisition that we've seen in the pipelines. So they're one that I'm going to keep an eye on here. They just sort of trade level, consolidate in this 66 area. I might be interested in dipping my toes in a little bit and, hoping for a buyout there. One that I did notice is moving up nicely throughout the day has been ICE. This is not the ICE that you're thinking of. This is the parent company of the New York Stock Exchange, the Intercontinental Exchange, Inc., but up about 4.31, and one of the few that I could see that was maintaining momentum throughout the day. You know what else was, believe it or not, the unhealthiest food in the history of the earth, Yum brand, some of my favorite foods, Taco Bell, Burger King, KFC, up 8.7%. And again, they raised their quarterly dividends. They did have a miss on EPS, but that dividend of 6% moving up there definitely has them moving in the right market. I actually see that my main man, Charlie Moon, has come in a little early here. We're going to see if we can get him to join us here a little early today. I do want to put up his information. Charlie has a webinar tonight on his AI room, and you want to be part of this. Charlie, what is going on, my main man? I haven't seen you in a while live. I listen to you all the time. How you doing, man?
I'm doing great, man. I miss you, brother. I miss you tons, man. I hope you're doing well too.
We got to get the dips to rips back going here. We will. We wanted to get everything in place at Quasar. Now we got it rocking and rolling with some pretty big numbers every day. We can come out to the legends like you guys and ask you to come join us and have a little fun. I was listening in today at 1. We broadcast you guys every day at 1 o'clock live from the floor of the SIBO. I'm in the same boat as you, man. This is like being on the Titanic, up and down, wind, sail, and I don't know what's going on.
Yeah, it's been funny. It's something that I figured yesterday, and I kind of saw it marrying today. But, one of the things I told people in the room, first thing was, don't be surprised if we have multiple highs and lows. Obviously, we actually made highs, slammed down the lows, ended up bouncing back, and then slowly grinding up. Today is a little bit different. We made those highs, we made those lows, and now we're just kind of mid-market, upper portion. But stocks are really acting a bit erratic to a degree.
Yeah.
I don't know if this is because of earnings. I don't know if this is because of the new administration and all the news that's hitting the wire. But it's not the easiest of market conditions to kind of trudge through here.
No, I heard you mention it today, and I fully agree. It is definitely a day trader market. It's volatility, and long-term holds are hard to do. You just tweet analysis is more important than technical analysis right now.
That's a great way of putting it, man.
It's true. It's crazy. I mean, Elon tweets out and it moves the numbers. I'll tell you, I know you always say never fade the Musk, man. He's taking a beating right now.
Yeah, and obviously it's coming on the heels of horrific numbers out of Germany. This Uber today, Uber's ungodly strong coming off those lows that they had on earnings, and maybe that's been a bit of a residual effect that Uber's partnering with Waymo and really kind of getting first to the market, as opposed to what was highly anticipated that when Trump would take office, that we would see this really strong push for FSD, and of course it would then carry into robo taxis, but we haven't even heard anything close to that measure. And plus, Elon's also dealing with, and we brought this up the other day, he's dealing with obviously his government responsibilities with Doge, and he still has Starlink, SpaceX to worry about, we've tried to, I didn't really look, but we were having this discussion. Does Elon even have his pay package approved for Tesla yet?
No.
Where is his true incentive really laying? And it wouldn't surprise me with the kind of money flow that's been being thrown at SpaceX, especially with government contracts, with Starlink, and maybe is just his attention's being drawn away from his pride and joy, which is Tesla.
Yeah, I think you hit on a couple of things. The first one I would go to is Waymo, and their head start that they're really getting in this, and especially they just announced they're going to Tokyo. To me, that's a huge deal. So that's got me positive, even with Google being down on their earnings. That was one of my big takeaways from their earnings report yesterday was, Waymo going to Japan. I was like, wait, what? I could see that as it being the city that will be fully automated like that. They're so technologically advanced and they adopted so quickly. So that was a part that I'm watching for sure.
And it's funny that that's the city that's picked, because if anybody's ever been there, it's so crazy. It's such a congested city, but when you walk around, it's eerily quiet. You walk around New York, there's so many different external noises coming around. But in Japan, it's a very much a cultural thing, right? Head down, walk forward. Absolutely. Don't say a word, don't throw garbage. Everybody's just so orderly, even in the midst of chaos. You could see the order. And it makes a lot of sense to be able to actually bring technology like Waymo into a city that would, one, accept the technology, like you had said. It would be really adopted very quickly. But two, there wouldn't be any brushback. People, again, would be more likely to get out of the way and allow those vehicles to work in the way that they're going to do, or they're going to be configured. And so it makes, for me, the most ideal condition for Waymo to really test in a major city.
Yeah. So I mean, I'm excited to see that. I have to ask too. I mean, it's the world of mean reversion right now, right? Any of
Yeah.
these early morning risers are falling, any of the early morning dips, although today's dips aren't really rebounding very quickly today. We're not seeing too many dips to rips. Uber, like you said, has been, a pretty decent little move here the last 4 hours or so, moving back up. But a lot of the other ones are sitting, down and haven't rebounded. But that's what I've noticed. We're just range bound with all these.
And that's what happens, right? When there's uncertainty, people are not sure how they should trade stocks. So what's the attitude? Well, I want to buy, but I don't want to hold. So let me get in, let me get out. And that regurgitation is happening back and forth. You're right. Some of it's really tied to like the sectors and the big stocks, right? So we're seeing like a divergence right now where Tesla and Amazon were really weak this morning, but then they've come back strong. Meta was really strong this morning, and now they're working towards the lows of the day. Apple's been all over the place. Nobody knows how to read Apple. Microsoft's been all over the place. Nobody knows how to read Microsoft. So we're kind of in this like really weird dynamic where the market participants are collectively unsure. And so usually when this happens, it's not that we generally will see risk off trading. Volatility usually tends to more bearish outlooks. It's uncertainty with a tinge of being in a very bullish, uplifting market, right? Because we've seen the Qs march back, we've seen the SPY march back, and this has kind of been the theme since 2024. We broke out to the upside, came crashing back down. We broke back up, came crashing back down, and now we're working our way back up. Just been a crazy spin cycle, and eventually we're going to pick a direction. Usually it's, within the first 3 to 6 weeks of the calendar year, we see institutions, hedge funds kind of building out their positions for the first quarter, first half of the year, perhaps even for the entire calendar year. And we're still seeing that development kind of take place. And it may not be as active as we had saw last year. Last year, around mid-February, late February, we had that really explosive breakout that continued all the way to the end of March. Yeah. It's possible we see something like that as well, but we were a lot more steady at the start of 2024 than we have been at the start of 2025.
Yeah, and this is the chart. I mean, if you just look at the daily chart on the Qs, it shows you that tweet versus text, is 4 days up, gap right back down to where we started. 6 days up, gap right back down to where we started. I mean, this is, this looks like a meme stock. And this is huge.
Right.
That's the part that has me, going like, what's going on? It's just, you don't know today, looked like it was going to make its run, but now today everybody's hearing about the repos and banks aren't putting enough money into the repos. So that means maybe they're tightening up their supply. Who needs the money the most? Smaller companies. Now they're going to be under pressure. So it just seems like it's such mixed message. You could sell me to both sides of so many different stocks and so many different sectors right now, where you could convince me today that it's a bullish outlook and tomorrow it could be a bearish outlook, and I could be sold on either one.
And you could be right on both instances, quite honestly. It's funny that you mentioned the repo. The repo thing hasn't been talked about a lot, but the last few repo sessions, we're seeing extreme lows. And for people that are not sure, the overnight repos where the banks will park their money and in return they get a little bit of interest return rate. And usually with these reverse repos, it means the banks are flush with cash. Right now, if the repos are actually low, it means that that cash allocation is way out there in the market environment, which I kind of find hard to believe that it's out there out on, a ton of mortgage loans and commercial loans with interest rates as high as they are. So we have to say, where's that money right now? Whether that's the equity market or the bond markets, the money is not going into the repo market, but it's being distributed elsewhere. So what does that lead to? This is such a weird dynamic because the Fed as
it's
well.
a weird dynamic because DXY is growing faster than that interest rate. So I think that's part of it. It's better to hold your dollar than it is to put it overnight and park it for, a few bips.
Right. And again, this also suggestively says that maybe perhaps the Fed has to lower rates a little bit more quicker here than they're anticipating this year. But I think the big thing here that we're kind of not recognizing is we're seeing yields jump and people are wondering why. Well, there's demand for the bonds, but unfortunately the Fed continues to unwind their balance sheet. So even though we're trying to bid up, we're getting, heavy layers, billions of dollars being dumped on the markets by the Fed, on a month by month basis. So I don't think that this market will truly get, outwardly explosive like we could possibly see a repeat of last year until the Fed really stops unwinding their balance sheet a bit. They don't really have to start easing per se, but the quantitative tightening, there has to be some sort of adjustments because this is now heading on a crash course, which is known as stagflation.
Absolutely.
And that's the one thing that the Fed can't allow to happen because that would undermine everything that they've done. That will put us in a really, really bad position economically. Obviously with the new administration, that's the last thing.
Right. Well, that was the Volcker, the years of the Volcker years where they would
listen to the markets.
Well, I didn't see here. I'll get QQQ up on my screen here for us.
I don't know. I just looked up
the downside
meltdown.
This is what we're talking about. This just rapid 2:30 in the afternoon. What just hit? Let's check a look at the Mag 7. Tesla 241. So it dropped to lows. I don't see anything out of the big boys.
I don't see
back to even now. But they're mostly trading in the middle of their daily trading range here. So it's not really the Mag 7 here that's moving this.
No, the SPY just blew it to the downside, new lows. They went negative for the day.
Yeah, they're down.
Qs are right back to the lows. Just a high volume
candle right here. We're talking about this volatility, and that's why, as a swing trader, even it's a tough market to trade right now.
Oh yeah.
The other part that I'll point out is that this, the widening of different interest rates around the world are causing, I think, to part of this issue too with repos and everything else is, we've got disparate, rates all across the world and they're widening.
Yeah. And so, there's so many ramifications, right? Now if we look at it from a macro standpoint globally, right? I think Mexico actually just cut by 50 basis points.
They did.
Today. Yeah.
Yep.
So, we're seeing some dynamic shifts globally. We're seeing concerns globally. There's still we're not even close to scratching the surface because what's going to happen with BRICS and what's going to happen with our relationship with China? What's going to happen with our relationship with India? How much weighting are we going to put on with their relationships with countries like Russia and Iran? And, where are we going to stand relative to, the ongoing war with Ukraine, the ongoing trade war with China? At some point, all of this has to ease because otherwise, if we continue to just rock tariffs and try to over leverage our standings within the world, we're now talking about EU. We're talking about ramping up with China. We're at 10% with China and ramping it higher. And I understand why Trump wants to do this. He actually, a part of this is he had that conversation about abolishing income tax, right?
Yeah.
Using the tariffs to kind of,
which is just taxation in a different form. In fact, I pointed out that my forefathers in Massachusetts once revolted against that. and they put some tea into the ocean, right? So that's all that's what a tariff is. I mean, that's exactly what happened. We built this country about not having that. So yeah, it definitely, we make light of it, but geopolitical conditions are definitely have people on edge, I think. Like you said, I've talked to more and more traders that are going net zero at the end of the day that I've ever heard. And not people that normally did that, people that were swing traders. I'm not talking about their retirement accounts or they have long-term theses, but people that used to carry stuff for a month, 2 months, they're not doing it right now. Are you seeing that in the rooms and stuff?
Oh, 100%. 100%, Howard. People, they're just willing to just buy into these stocks a little too early, not realizing what's going on and just getting absolutely rolled. And I get it, buying into Tesla makes a lot of sense on the dip because of the history of performance. But, there's a cause and effect. And right now, whatever the cause is having a very resounding effect. And just like we had talked about that back and forth trading in the markets, it's really difficult. Even with those with the strongest of risk tolerances are having a difficult time really dealing with the market conditions because, this isn't really too much of a repeat from what I've seen from Trump's past administration. But, if you remember 2018, him and Jerome Powell were going heads up. Him and President Xi was going up. That's when they first initiated those tariffs on China. And that caused a lot of these like back and forth type of movements and uncertainty in the markets. And, if you think about it, we're not even there yet. We're just seeing a mild case. So once things ramp up, what are we really truly going to see? And that's, when like I said, when we're at that 3 to 6 week time frame, which we're in right now, and we don't get a clear-cut direction, we're more likely actually to be working lower than higher. Usually the market will signal that it wants to start making this move fairly early. And, what usually leads the market is the Mag 7, right? Well, what are we seeing with the Mag 7? Well, Google bombing out on earnings, Microsoft bombing out on earnings, Tesla breaking down and working lower and lower. NVIDIA got underneath the 200-day moving average. The only one that's really stand out and holding up their head way above everybody else in the clouds is Meta, maybe even Netflix.
Netflix too. I have those two as sort of, and I was going to point out, with Tesla, you've got real downside. We were talking with Jay Woods from Freedom Capital today. You have real downside to 330 here.
There isn't a whole bunch. Definitely the level.
What?
330 is definitely a level to be watching out for.
Yeah, he pointed that out today, and you could even see, he pointed out you could see a gap fill.
100%.
So I'm with you. Trying to take a chance just because some of these names have been hot is a mistake. We've seen it over and over in times, right? GME's never come back. AMC's never come back. And I don't just mean to pick on meme stocks, but, there's a million of them that, you keep on saying it can't go lower, and it just does. Bear Stearns, it went out of business. We just saw it with Spirit Airlines, right? So that's the things I do want to warn. Are you also, I find that I'm leaving maybe a few extra pennies on the table more than I used to, and being a little bit more cautious to take profits too. Because, again, it can just be so, like we just saw at 2:30 in the afternoon, just a random, drop.
Yeah, no, that's actually kind of a really good breakdown because I was in 2 trades that were doing incredibly well. VST was one of them. I was up a ton, and overnight, my profits got slashed by half. And when I mean we're up a ton, I mean we were up like 20, 30 points from our entry point. Lulu was really similar as well. We were riding up Lulu from, I think, around like 383, got it up to 420, and then it was like set to open at $400 the following morning. I think it actually did open at 400. It opened at 404 half after closing the previous day up near 420. And so, like, dealing with that kind of fallout, no wonder people are leaving a little bit on the table. Better to be safe than sorry. Better to be, taking profits too early than too late. So, that just kind of proves how rock solid of a trader Howard Greenberg is, the man. And this is something that you guys should be doing. Don't be worried about leaving a few crumbs on the table. Be worried about that whole meal getting snatched out from underneath you.
Absolutely. Without a doubt, that's the key. One thing I learned to prosper from all of you guys was it's about, portfolio maintaining it. You have to have that money. You have to have it on the sidelines. You have to be ready. You have to play the market in front of you. And too many people play the market that was 2 months ago.
Right.
And that's where you really have to be careful. Or if our friend Mike Sure used to say, don't go pick that nickel up in front of the steamroller. Because that's what Tesla, that's the, I keep going back to that same one, but it's, it is, if you, just look at where the different times that you would have gotten into this at 397, back here, that you would have just gotten crushed.
Yeah. You never want to be that, rear view mirror type of trader. Not so much that you have to be a leader, but when you're a follower, the idea is that you're trying to follow early as possible, as opposed to the top. Just think of this, guys and gals. Just think of the mountaintops, right? So we could be on this ascension, and we don't want to be on this side of the mountain. And if you ever watch The Price is Right, where they see that little guy that's a yodeler, and then all of a sudden he falls off a cliff, game over. So timing is appropriate, knowing when things are a bit extended. And even if it does continue to go up, so what? There's so many different stocks out there. People just get too hung up about, if I just would have pulled the trigger, I would have made some money. Yeah, you know what? You would have pulled the trigger on other stocks. You could have made money as well. Get off that woe is me attitude and move on to the next one.
Without a doubt. And another thing that, you taught me was you're going to be much more likely to sell that position and put it into another stock that actually has positive momentum and make that money back than trying to wait for some dog to catch a wind. And that's definitely something that I definitely look at. QQQ continuing to drop down here. Looks like we might go back down to lows of the day here, Charlie.
There's really no news on this either. This is just kind of what's been happening. Yeah, and the best way to relate it to just from, a humanality standpoint, I'm sure at one point in time, all of us has been in a bad relationship, right? And so when did life get better? Life got better once we cut ties with that bad relationship and moved on to one that was obviously more beneficial and made us happy. That's the same thing with these trades. Don't be married to the bad trade, okay? The longer you stay in there, the more of a heartache you're going to deal with. And obviously there's financial implications in this instance. It's the same theory. Cut your ties, move on to the next one, let the market work for you instead of against you.
Absolutely. That's, a key right now. I'm also letting things prove to me that they're actually making a break, or that they at least have some asymmetrical risk to them that's going to make me a winner before it makes me a loser. And I think that's important. You guys are always big on that, look for solid support. But I've also, like you said, do you think NVIDIA was going under that 200-day MA?
No, what's crazy, I actually thought NVIDIA was going to bomb out to $100 because, I do my Sunday mentorship class and, we saw futures open. It was a bloodbath. Equities opens about an hour and a half later, give or take. And I just saw NVIDIA trading at 110. I was like, oh my goodness.
Yeah. Crazy. Just absolutely crazy. Charlie, I know you got to get back into your rooms there, sir. Thank you so much for coming on and joining us. We're going to hit you up more to have you on probably every week, whether or not you like it. I know where you live. So thanks so much. Give me the last words of the day there, Charlie.
Man, listen, anytime, anything for you folks, you better listen to Howard because the guy knows what he's talking about. One of the best in the business. Keep it short term for now. We'll see how the market conditions either deteriorate or get healthier. That could really be determined by Amazon after hours. So stay tuned.
Absolutely. We'll see you tomorrow at 9 a.m.
For too long, traders have been burdened with fragmented tools, scattered data, and outdated systems. It's time for a better way.
It's going to take 2 minutes.
This is Quasar Markets, an award-winning platform that doesn't just support traders. It empowers them to do their best work. With Quasar Markets, we've brought together over 1,000 tools into a single, seamless experience.
What
It's
AI
all here
platform
in
do
one
you
place.
use? Commercial.
When it comes to data, we knew we had to get it right. That's why we've integrated insights from the most trusted sources: Edgar, Fred, NASDAQ, the World Bank, and other leading financial institutions, along with real-time updates on sports, trends, weather, and news. But we didn't stop there. We wanted to empower every trader to learn, grow, and succeed. That's why Quasar Markets gives you access to leading educators and strategies powered by advanced AI. At the heart of it all is AI. It analyzes millions of data points, identifies trends, and delivers actionable insights. What makes Quasar Markets truly revolutionary is how it adapts to you. With customizable tools and flexible options, it works the way you do. We've built this platform with one goal: to help you make better, faster decisions without the noise. This is the future of financial research. It's simple, it's powerful, and it's built for you.